Good morning. What I'm going to do here is make a quick little video on um, the trade management system, take a couple of trades so we can see how those orders are set, and so hopefully it'll be pretty quick here. As part of the trade management system, of course, we use the matrix over here. And when we look at the matrix, we want to, well, we don't need that expanded like that. We want to look at the order entry box over here. And as we see, we can set it for the quantity of 1, 4, 2, 3, whatever. And when you set this, you can also set and attach OSO, that's order since orders, so that you can set your limits with it. And the way they describe that, you hit this little ellipsis here, and it describes it, brings it up here. It says, here's your limit where your profits would be taken. You set that wherever you want. Now I have that set at 5 ticks. And then the stop market is wherever you would want. That's your stop loss. And I have that set at 4.5 ticks. So that is how that's set up. And you can set it up any way you want. There's advanced to it as well. But it's pretty simple. So what it does is it's what they, oops, that's not what I wanted to do. It's what they call exit and bracket. So anytime, because what happens is you put your order in, and then those stops that you set will be above and below the order place that you set the order at, and that's bracketing your order. And then once you put your order in, if you want to, you can come down here and there's a cancel and all that. Well, one thing I should mention about this bracket order, if you change this to, let's say 2, okay, then you have to change this OSO too. You set that up ahead of time. So here it's set up for 1. So if I change that to 2 contracts, I got to come down here and I'll set it for a bracket of 2 limits and 1 stop. And what that would look like is over here, you would go in and you set it for how many points you want to take. And perhaps this is like John's idea where you put in 2 contracts initially and take one off. Here's one that's taken off after 6 ticks. Here's one that's taken off 20 ticks. But you can see the stop losses are different on them. So you could set that up any way that you'd want to. But for our demonstration here, we're just going to stick with 1. Okay, so let's move this back to 1 limit, 1 stop. So there'll be 1 above our price entry and 1 below. And we're going to put a trade on right here using the matrix quickly and show that, and then we're going to take it right off because I don't know that the timing is right. We haven't read the charts yet. But let's say we're going to put a buy in right here. Okay, so here we have a buy of 1, and we can see our, I'm going to have to move this up so I don't get filled. We see our bracket, so it's right above it with our 5 ticks, and then down below it here, here's our 4.5 ticks for our sell stop. So once that order gets filled, at whatever point we have, that's how it will bracket it. So we'll see that when we take an order. So, okay, so let's now see what's going on in our charts here. The first thing I'll mention is this indicator down here, the range indicator, just recently been changed. You know, these color changes have been changed. And so now what this line is called now is the range trend indicator. So the color basically is an indication of the trend. So, but you have to pay attention to the slope. You read the line the same as we always have. It's very important with the pullback line and the upper and the lower limits. So you read it similar to what you always have. But now you can read the momentum line on this inflection indicator. You can read the momentum line along with the trend line. So we see that this price is coming down, and so you'd read that right here, that the range trend line is cutting up through the bottom, and this is cutting up through both the bottom and the inflection line, the momentum line is. So that's always a significant possibility of an up signal, but we would still read that okay, the momentum is up, but the range trend is still down. So it gives you some way to gauge what's the longer term and shorter term, although the slope now becomes very important to this range trend line, because the slope, it will either agree or disagree with the momentum. So that's one way to read that. As we look over here, we see on our 30-minute chart that the candle is green. Let's see if we can expand this a little bit. No, we don't want to do that, because it's better to do it this way, because the candles show it bigger. Okay, so right over here, we had the white candle. You know, I look for basically the magenta and the white. Here's a white candle. It says it's going to potentially come down, and it did come down. Here's a green candle that says that it's going to go up or consolidate. And we see that from this white candle, the price came down, and then it consolidated right at this area. It continued down. And it looks like it reached an inflection point right there, and now the green says it's going to go up or consolidate, and it's going up. Let's see what's happening on our NYSE tick chart. And here we see the use of this. The NYSE tick chart here started off down here. So we had a good indication that the first early movement after the market opens is going to be up, and now we see that it's right in the middle, which is not an optimal trading range to be in. When it goes above it or it goes below it, then we expect a reaction to that in the opposite direction, and then after we see that, then we come over to our charts and look for our signals. So I'll wait a little bit here to see if we get some buy signals or sell signals, but otherwise I might just take a trade and show how our trade management system works, although it may not be at a completely optimal chart reading. So let's just give it a minute. I should also mention too that I have the other indicator up over here. On this side, this again is the 1500, and over here is the 500. On the previous chart over here, it was the 750. You can see that 750 and the 1500. So over here, you know, it's just same data, just a different look. So I have that on a line chart, and the timing alert dots show up a little better and stuff. So, but the main thing over here is this is the daily. So I want to see what has the day done. I want to remind myself of what has the day done. So I see that it has some up move and up move, and then different people have been, you know, if you read different columnists and stuff like that, they'll either tell you that they think it's going to go up or go down, and this is an expected reaction. Weiss in particular thinks that it might even retest these lows. So I use this just a little bit for normal chart reading, however you would normally read the chart, and also to set up some expectations. It doesn't mean that it'll happen today or won't happen today, but I use this to set some expectations just from our normal chart reading of a daily chart. So let's go back now and look at, see if we can pick up some indicators here. So just continuing the read here we have the range trend line, and we know that this is the pullback line. So it's hovering about around it. Of course, the price is going up, so now the range trend line it went green here. It's fluctuating, you know, kind of whipsawing between red and green here, and that would be natural because you had a long down move here, which would be red, and then you had a reactionary fairly good size compared to this down move, up move, so we have some green in it. So it's using the range to find the trend as well, but it's at the pullback line, and now we see that the momentum line is cutting down through both the upper bound and the inflection point, and it's turned red. Right here it's white and it was overextended, so quite likely this could come down below the pullback line, but still this is not an optimal trading area. If you wanted to trade it, you'd have to read all the indicators together and make a value judgment. It's just best to wait till the signals all together agree and stand out. Stand out and tell you which direction to take it in. And I don't see that that's clear right here. But again, this over here helps form a bias, kind of some expectation. And I won't fill up this video with a lot of analysis because I know that that's not what it's meant to be. It's meant to be just looking at the trade management part of the system, but just making some commentary as we go along, because you really want to use all parts of the system together. We've talked already this morning about this range trend, the range indicator with the range trend line and the colors and the slope, and also the relative position within the oscillator, whether it's at the pullback line above or below and everything. And of course, this is coordinated with the inflection oscillator, and that's the same thing. Is it above or below the midline, the upper and lower bounds? What's the slope to the inflection line? And what's the color? Of course, like this is red, and the white means it's extended into whatever direction of the last color. So this is extended to the downside, and we see that that breaks, and this is extended to the upside, and it's over and it cuts down. We see that that breaks. So we read that. Also, at this point right here, we couldn't tell by the range indicator because it's hovering right at the pullback line, and we see, in fact, later on it does pull back. But then we look at this energy indicator, and we see it turning gray, but it does have a strength type of underscore here because it's yellow. So we really don't know which way it's going to go. Well, I should take this horizontal line off. I put that on just pre-market over here because I estimated that it was going to go down, and I wanted to see if that's what happened. And in fact, it did go down. I estimated that off of the readings right at this point in the chart. Wasn't something I wanted to trade, but I did want to evaluate it. So let's remove that. Okay, I know we're waiting to take a trade. Of course, this now is the RTM line, the regression to the mean line. That's what I call it. And I just changed all these names because out on the website, you know, uh, we can't be using our names and these weird names for indicators and stuff like that. It just makes it easier for the other uh, people that are inquiring into the website to uh, kind of get a handle on what it is that we're doing here. So uh, we still see that price is around the RTM line, but it's going below now, which is also a significant feature. So not that this is going to be a great trade or anything like that, but let's say, for instance, we wanted to put in a trade right now. Well, we see this long tail here. Um, this is coming down. It isn't optimal, but I'm just saying if we wanted to, and let's say we wanted to take it to the downside, well, then we would come over here, we place our cursor right on the red column because that's sell and the blue is buy. You can see that. So there's sell and there's buy. And we place it below where price currently is. And then we could adjust it. Now we'll move it up so so we're in the same window frame and everything. And we see prices going up here. So that's part of the trade management process, is that you put it below, and if your analysis is wrong, then basically you won't get hit. But if your analysis is right, you move this around to where you're going to buy into strength, and you keep reading the indicators over here while this order is standing and your price has not been hit yet. Now we have the inflection indicator with the momentum line below the lower limit. Okay, so that is a place where it often could start cutting up, and now we see that it's a little bit extended, and maybe it is starting to cut up through the bottom. This has touched the range trend indicator line has touched the lower limit, and now it in fact could go up too. So that's why we put this order on below, because had we said, oh, I want to go short here, now we'd be involved in waiting on something. And also, it's just because it's right at this RTM line, it's kind of fighting out between the supply and demand as to who's going to take control of the day. Nobody's doing it yet. As we know, when it cuts through, so now in our trade management, we see that it's going up here a little bit. We no longer like the short, so we just come over here and cancel it out. Or if we want to come down and do it this way, we can also use the order entry bar over here and just do a cancel all, and that takes care of it as well. So we come over here, and we know that when price breaks this RTM line, either to the downside or upside, eventually it just doesn't snake around it like this. Eventually it will take off in one direction or other. Let's see, like let me find one historically here. We're just looking for where it crossed over, and you can see, that's not one either. There, you can see, okay, so now it had been snaking around the RTM line. It was above it, then below it a little, and now it went above it. And remember, the RTM line is also a support and resistance line, so it comes down, it hits support, and now it starts going up. So this is like at 2660, okay, and you can see it starts to extend away from it over here till it's what's that top price? The high price is 2685. So that's 25 points that it went in the up direction. So there's probably plenty of trades to go in there. So So that's another thing that you have to pay attention to is that RTM line in concert with the other indicators. Uh, Hopefully it's very simple how you put all these together, like just kind of reading the page of a book, and then the different price timing points would be more like the I don't know the characters in the book. I don't know. Over here, I'll mention another thing. Here we see a gray bar within the red, and when we see a gray bar within the red, we know or we think that that's potentially setting us up for more of an protracted up move when the red is over, and we know that's out in the future. When we see this, we're not looking at it right here, but we're looking at it out in the future, over here and over here. And we see, in fact, that is what happened. Like everything else, nothing's 100%, but what you do is you're not trading off of absolute certainties. You're trading off of probabilities and your estimation of those probabilities. So when we got this, then we would look for this. And this is where even earlier in the morning we said, like, here's how we're reading this. The momentum line is at the bottom, is coming up through the inflection line, and the range trend line is still reads down or red from that previous down move, but the slope of it here is up. So the slope is agreeing with this, and because of these other indications and what our expectations are, and here the price turns green, that would let us say that even though this shows a range trend of down because of the color, we're going to react to the slope rather than the color, and we're going to take that trade with all the other indicators that we had. So now we see some strength coming in, and it's going up. So if we wanted to now put a buy on, and we'll just say we do, we would put our buy. You can do it however you want, but you put it above the price as it is now. Let's put a buy on. So we put the cursor right in the blue column here, and now we have a buy on, and let's see if it's bracketed. Okay, there's a buy. There's our profit target, and here's our stop loss down here. And again, that's it. Look, we started to read that, and now it's going a little against us. We're glad we didn't get in that, again, because it's still fighting around the RTM line. This had reached the upper limit, and now it's coming down again. So we can leave this trade on or take it off depending on how we read all the other indicators. The NYSE is in the middle. That's not a good thing. Don't worry about this because this is a part of our bracket order. It might hit that, but nothing's going to happen. Nothing happens until our standing order, which is right here, is filled. And then those bracket orders become active. While they're green, they're not active. So now we see price coming down again. So again, that's not a trade we want, so we'll just cancel that out over here. When we cancel it out over here, because remember, this was an OSO, an order sends order, so when this order is filled, the other orders got placed immediately because it was an order sends order to bracket your price. So when we cancel it out, like this, it cancels everything associated with it as well. So let's continue to see if we can find a trade. Okay, so I got a magenta bar here, and this price is going up. So I'm actually expecting price to go up. It did hit the pullback line, and now it's below the pullback line here. It's right there. I'm actually expecting it to go up at some point here. I know the inflection line is sloping down. It's not quite at this severe of a slope, so I'm looking for it to not cross the uh, midline, or if it does, cross it and flatten out like it did over here on the 750. You can see on the 750, it's in the upper half, and it's above the midline, whereas in the 1500, it's just starting to reach it. So uh, let's keep our eye too on the quicker time frame, which is the 750, and see what might be a good time to get in. So what we're going to do, I'm not saying this is optimal. So I'm just showing you how it would use. So we're looking to buy. We place our buy order here. We see it's bracketed, but we now want to move it down to get closer to our current price, because we are waiting to see a good signal for it to go in our direction, and then maybe we'll move it a little bit closer. Okay, so we're just leaving it right here now, even though we thought because of this it was going to go up. This again is not in an optimal position to trade long or short, really. So you're going to have to rely on these other indicators to do that. This is part of that reliance of reading the volume bars. But we're saying if we think it's going to go up, which we think, we're going to leave it right here where it is right now and let it go up and hit it and buy into strength. If it's not going to hit it, then it's just going to keep selling off and eventually get too far away from us that we would just cancel the order out. So what we're thinking here is, again, if this does come up and finally hit us, then we're probably buying into strength. And
order filled.
Now the order got filled, so now we're going to manage that. We're gonna see what happens here. So now you can see our brackets are live. Here's my profit target, and here's my stop loss. Okay, so we see that this is coming up through the midline. The range trend indicator hit the pullback area and is starting to pull back. So that's not optimal. Matter of fact, the whole trade probably wasn't optimal just because it's hovering right around this RTM line. But still, this is how we manage a trade, and we will see what happens with it. So in our learning our trading skills, we want to take at least 1 point off of the trade, because we know. So we set it at 62.50 here because this is just sim trading, and 62.50 would represent an actual 1 point in an actual trade.
Order filled.
Okay, so we just got filled there. So that's how that works. We bought into strength, and our indicator showed us some strength. We had some expectations because of the magenta bar, but we didn't know if it was going to be a trend or not. And the trending aspect we'll cover in a different video. But we do know the trend at some point goes away from the RTM line. So that's one trade. We'll take another one when we see a setup here. Maybe look to go to the downside somewhere and see how that works. It's the same difference, only in the opposite direction. And then we'll call it a day. another aspect of reading the indicators, of course, and here's an indicator that we didn't particularly program, is you keep aware of what time it is. So again, we're just after 10 o'clock here. That's an inflection point. If you notice on the trading worksheet and everything, we went over these in a number of meetings before, that you have inflection times, and we're looking like at 9:45, 10 o'clock, 10:30, 11 o'clock, 11:30. So we're looking at those times in particular for some activity. And here you see why we took 1 point, because now it comes out and it reverses. So we're looking at those different time frames, because in the morning it can go up and down more, with a little bit more volatility than it does a lot of times in the afternoon. In the afternoon, especially as the afternoon goes along, the market has tended to pick a direction. Like over here, yes, it still swings up and down, but it had picked a direction, and in that case, it went up. So we want to keep aware of the time frames we're trading, because of the volatility. These range indicators here just tell you kind of what environment you're in. Again, these are not the range of any specific bar, but it's a calculation of the range of several bars together. It's not an average, but it's a calculation of what range you're kind of dealing with, depending on how you want to set your brackets with your targets and stops. And you also want to consider, what is the price action? Is it just vacillating up and down through the RTM line? And we see that as much as it did that, it went to the lower limit on the inflection indicator, then it went to the upper limit, but in fact, it really only cut through half of the RTM line. Like half is above it, half is above it and half is below it, etc. So we want to just be aware of all the conditions that are happening at what particular time, and that helps set up our expectations. But we still use all our classical signs too. So we know an uptrend is higher highs and higher lows. Here we have a higher low and higher low, and now it's come back down. But this is a higher low than this. This is a higher low than this. Now, if this stops here, this is a higher low than that. Not that it will, because we see it, the momentum line cutting down, and it now has gone red. The range trend says that the trend is basically down, but it's at the lower limit, and this is approaching the lower limit, while the inflection line isn't necessarily approaching the lower limit. And over on the 750, the momentum line hit the lower limits below it, but the inflection line only went to the midline. Now it looks like, because of price and the energy of what's the traders supply and demand, it looks like it might go below it here. So again, if we were going to take a trade here, we take it to the downside. So again, probably not optimal timing, but we want to see how the matrix works, and that's our objective. So we just put on a short trade. It's a distance away from where price is right now, and we see there's our bracket. Of course, this is 4.5 points to the upside because we have a sell, and if it's a sell, our target's going to be low price, and here's our target. So here's our order, and those two are our brackets, and we'll see how that goes. And if you have a small window like this, like I do, you can just move this up so you can keep the price and your order within the same window and watch what's happening.
Order filled.
Oh, I did not want to do that. Oh boy. So, okay. Let's just do this. Let's move this up here. And we will move this down here. And
Order filled.
yeah, so now we're out of that just because that's not something that I wanted to do. I kind of moved it up too fast. So be careful of doing that. So on that fine note of a screw up, it gives you all the examples of what's going on. I'm not going to make the video any longer here because I think we've demonstrated how you want to set up your order entry with your quantity, your OSO, how to bracket your OSO with the limits and stops. That's these guys, one limit, one stop. You can have more than one, and if you change the quantity, you have to change your OSO as well, or the order will not execute. Then we talked about how to place your orders above or below where you're looking at, and then you keep reading the indicators to see if it's going in your direction or not. If it is, you might want to move it closer. As a matter of fact, you can see here, had I not closed that order out, we went short. Had I not closed that order out, it looks like we probably would have got our point too. So at any rate, that is somewhat the trade management system. And if you want to know more about that or want to comment on it or anything, just let me know, and we can do another one if that's what's going to be of benefit. So that's it for this video, and talk to you again.